Raunak Onkar joins us, Head of Research with PPFAS Mutual Fund. Raunak, good morning. Thank you for joining us. You know, the road sector is a go-to sector. You guys don't own it, but it's a sector where, in general, there is a wave of optimism. Do you think markets are getting slightly excited about owning road companies? Because yes, NHAI order book is strong, but there is a question mark about credit availability for some of these road companies given the state of PSU banks.
Thanks, Nikhil, for having me. Good morning. So the road companies, we have never tracked them as such, and the reason was that we owned an infrastructure company in our portfolio called Noida Toll Bridge, and we realized
that was not a good experience.
It's not about that experience, but learning is that a lot of people don't want to pay for these infrastructure projects. So the revenue models that are trying to be worked out in terms of how these projects get funded and how the cash flows will accrue to the private company who is helping build those roads. Those things something are difficult to understand. Even though it is clear cut on paper today, a lot of things do tend to change as the traffic expectations build up and people see the actual traffic on the roads and people figure out how the business model should evolve. So I think credit availability is one problem. On the other end of the side, the businesses that are running, they also need some cash flow the cash flow availability should have over a period of time when the roads are running.
Yeah, last time when we interacted with you, I think it was early part of Feb, late middle Feb actually. And your house view was that you were not very excited about the current market levels. Your cash levels were also significantly higher. Are you still sitting on those high cash levels, or are you looking at putting money to work?
So we still have those cash levels. We're about 22%.
That's a very large number for a mutual fund to have.
I agree, but instead of chasing ideas which we don't have conviction in, we would rather wait for the right idea to invest in, and it's nothing to do with market level. So market can be wherever it is. If tomorrow an idea comes in, that residual cash will be immediately deployed, say a 5% or a 10% will go into 2 stocks, and you will see a 10% cash holding. The point is to have conviction in the ideas we own and only go for ideas where we are sure that we have some edge in understanding how the business works and have some visibility in how the business will grow.
Are you looking at buying new ideas, or you will be happy to put this 23-24% cash what you have in the existing ideas or existing stocks at lower levels?
New plus existing. So depending on valuations, if something in the portfolio is already run up, which will be replaced by something which has a growth trajectory over the next 5 to 10 years, we'll look at it that way.
Raunak, hi, morning. I have to ask you, what is it that you're making of the tech debacle that's playing out on the NASDAQ? And every morning we hear about, how much Facebook has lost in market cap. And now Mark Zuckerberg has issued an apology. And again, Apple has fallen overnight quite a fair bit. Is that making you trim your exposure to some of these US stocks?
So it's an interesting thing that's happening in the US, where tech companies are taking the flak for the privacy concerns that people have, and the government is getting involved in trying to understand how pervasive that privacy problems were, and the companies will obviously try and fix it. It's a technology company, it's a software fix which will happen. In terms of legal ramifications, we are yet to see what's going to happen. But on the other hand, what I understand is the targeting, the technologies that are available, they are made for targeted advertisements, and the technology works and the platforms work, and advertisers need something which can help them target advertisements better to users and customers. So I think on one end the platform works in economic sense, but the other end you have to be very conscious about how privacy is being handled by all these platforms. So we have to wait and watch and see how it plays out.
Fair point. Do you sense that this could not be the end of it for some of these tech giants? I mean, are we staring at some big correction in the FANG stocks in some time to come?
Very difficult to say how the corrections will play out or even how the stocks will move up. But the point I was trying to make is that if the business models are sound, all we have to do is wait and watch to see the peripheral corrections that will happen over fines or whatever restrictions will be put on these platforms, and then we will see from that point of view how the companies perform.
You also have a very large exposure to consumer names. You also have names like Zydus Wellness, which are part of your portfolio. You also have a Persistent System, which are part of your portfolio. So I'll talk about both these sectors. Do you think worst of the IT is behind us, and do you think it's time to buy a name like Persistent? It's doing right things. It's a company which is not a large cap IT company, so it will not take a long time to steer the boat. They're doing some good, interesting work in IP and in SMAC. What's your view there? Do you think now worst is behind a company like Persistent?
It's tough to take a call if the worst is behind, because they still have a chunk of their business coming from the independent software, the software vendors like Microsoft, IBM, who
IBM business has not taken up.
Yes, so IBM has two parts of the business for them. One is the newer business where they engage in digital initiatives. The other is the software part, which they provide software development as a service to these software vendors. So that business has been shrinking, and they have been guiding it for the past 4 years in trying to move to a direction where they will be the IP providers to some extent. They will also be partners in digital transformation for some enterprise companies. And those things will take time to play out because it's a challenge for them since they don't have the enterprise relationships like the bigger IT players. So once that thing is on track, once the sales engine works, then we'll see the benefits of the non-linear growth that comes into the company in terms of operating leverage, in terms of margins improving over a period of time. I think right now they have to take short-term pain in terms of spending on marketing and sales and growing their business, and investors will have to wait for the actual results to show up.
250 rupees, which was about 2.5 years ago, Zydus Wellness, when your fund invested in it, it was a concept stock. You were betting on the fact that Indians, the genetic pool is full of diabetes, and then as India will grow, they would be more conscious about the sugar consumption habit. That script has played out because the stock has moved from 3-digit to 4-digit. Is Zydus Wellness now fully priced? Looking at the earnings potential, I'm talking about the big picture. The big picture will never change because Indians have a genetic pool which has a problem with diabetes. But in terms of the promise of growth and at the price, you think everything is in the price?
It's tough to say, but the way we look at it is, if you look at the market share of a company like Zydus, it's still north of 90% based on various estimates that are available. And the product, they are also in products which are in other categories of non-sugar based products like sucralose, stevia, the natural ingredient in terms of artificial sweeteners. So they are in the market with their products, they have a market share, they have a reach. The only thing that has to work now is the consumer adoption at a large scale as people will move from, say, sugar, regular sugar to sweeteners because they have diabetes. The whole point is it's a distribution game, it's a consumer play, and they'll have to figure out how to reach as many customers as possible, make the product as relevant as possible to be kept on your dinner table and consume it on a day-to-day basis.
You own MNC pharma companies?
Only one in a very small capacity, yeah.
Are you happy to own it because the stock has run up?
Yeah, it's been there in the portfolio. So we used to invest in Wyeth a while back and it became Pfizer and we still own the stock. But it's a very marginal position. We keep track of it in terms of adding or subtracting. We'll make a call when it happens.
Okay. Appreciate your time. Good luck and thank you for joining us.
Thanks, Nikuj. Have a good day.